Good morning, bulls and bears, and welcome to today's market update. Let's start with the US dollar index. The dollar rebounded above the 99 level as softer inflation data strengthened expectations for further Federal Reserve rate cuts. Core CPI rose just 0.2% in December, while annual core inflation held at 2.6%, reinforcing the view that inflation continues to cool. Technically, momentum is stabilizing, the MACD has turned positive, and RSI sits in neutral territory, suggesting consolidation rather than a clear trend. Key support remains near 98.4 to 98.8, while upside resistance sits at 99.32 and 99.82. Oil surged to around $61 per barrel, supported by rising geopolitical tensions involving Iran and supply disruptions from Kazakhstan. The technical trend remains constructive, with prices targeting the $61.2 area and the 200-day moving average near $62. However, a break below $58.4 could trigger a deeper pullback toward $57.5. Volatility is expected to remain elevated for this year. Let's have a look at gold, and we can clearly see that it has surged to fresh all time highs above $4,600 per ounce. And the primary drivers include political uncertainty, safe haven demand, and expectations for further Fed rate cuts. Despite overbought conditions, the broader trend remains firmly bullish. Initial support is seen between $4,500 and $4,550, while upside targets extend toward 4,625, 4,687, and potentially $4,720 per ounce. Finally, let's have a look at the Australian dollar against the US dollar, and we can clearly see that it's holding near 0.67, supported by hawkish signals from the RBA and a softer US dollar. Momentum is improving with resistance at 0.6725. A break higher could open the door to 0.6766 and 0.68. On the downside, support is seen near 0.666 and then 0.66. That's it for today's market update. And remember, the trend is your friend.